Welcome to the deep dive. Ever wondered how businesses figure out exactly how much it costs to make something, especially when, every single order is a bit different?
Yeah, it's a common challenge.
That's where job costing comes in.
Right.
It's one of the main ways to calculate these costs alongside process and batch costing. Think of it like, well, project by project accounting.
Exactly. And today we're really zeroing in on job costing. At its heart, it's about collecting all the expenses tied to one specific job.
And a job is like a distinct batch.
Usually, yeah,
Mhm.
a distinct batch of similar things. What's interesting, I think, is how direct costs are tracked to the actual materials going into the product and the wages for the people physically making it.
Okay.
These are normally logged at their actual cost for that specific job all the way until it's done.
So like if I order a custom bookshelf, the carpenter tracks the exact wood, the hours they spent, just for my shelf.
That's job costing right there. It's perfect for places using the same facilities for lots of different stuff. Construction, custom clothes, even the local garage fixing cars.
Right. They're all good examples.
And just to contrast, you've got batch costing. That's more for groups of identical things. Think a drug company making a batch of pills, or maybe a bakery doing a run of the same cakes.
Okay, identical batch.
Then there's process costing. That's for like a continuous flow of stuff you can't tell apart. A sugar mill, an oil refinery, maybe a factory making miles of the same fabric. Every unit basically costs the same.
Gotcha. So today we're in the world where each job is kind of its own cost story.
Exactly.
So our mission here is to really unpack the nuts and bolts of job costing. We want you, the listener, to get a practical handle on how businesses track and manage costs for these unique projects or specific orders.
Sounds good.
So where do we even start putting this into practice?
Well, the first really critical thing is understanding that besides direct costs, you've got indirect costs to the overheads.
Oh, the hidden costs.
Sort of. Think factory rent, electricity, the supervisor salary, stuff that's essential but not easily traced to just one job. So the big initial challenge is figuring out how to get these shared overhead costs, absorbed into the cost of the individual jobs.
Okay. So it's not just the wood and the carpenter's time for my big shelf. It's also a tiny slice of the workshop rent and the likes.
Precisely. You need to factor that in.
So what are the actual steps then? How do you divvy up those overheads?
Generally, there are about 6 key steps in a job costing system. Step 1 is the allocation of overhead costs to different areas or departments.
Okay.
Basically, you're figuring out which parts of the company are responsible for which overheads.
Right. So the cost of running, say, the finance department wouldn't get dumped directly onto the assembly line. It's admin overhead.
Exactly right. Then step 2 is primary apportionment of overhead costs.
Primary apportionment.
Yeah. Here, you take those allocated overheads and you split them between the production departments where the stuff actually gets made and the service departments like maintenance or IT, that sort of support production.
Okay, so even though the maintenance guys aren't building the bookshelf, they keep the machines running, so part of the factory overhead goes to their department first.
Got it in one. That's
Fair.
the idea. Step 3 follows logically. Secondary apportionment of service department overhead costs to production departments.
Secondary.
The service departments have their own overheads, right? But their main job is supporting production. So we take the overheads we just gave them and then re-spread them out to the production departments they actually help.
Okay, so it's like the maintenance department's costs eventually get shared out among the departments using the machines they fix.
You've got it. Following the support trail, as you said, step 4 is pretty straightforward. Calculate the total overhead costs for each production department.
Just adding it all up.
Yep. Just summing up everything that's landed in each production department after those first 2 apportionment steps.
Okay, so now each production department, assembly, finishing, whatever, has its own total overhead figure. What's next?
That leads us to step 5. Calculate the overhead absorption rate for each production department. These rates are super important
Why is that?
because they're the tool, the mechanism we use to actually apply or absorb those overhead costs onto the individual jobs as they pass through the department.
Okay, this sounds like the crucial link. How do we actually calculate these rates, this absorption rate?
Right. So you usually calculate an overhead application rate. You take the total budgeted overhead for a period and divide it by some budgeted level of activity. We often call that the cost driver or standard basis.
Budgeted. So it's an estimate.
Yes, it's predetermined. Management needs to pick the best basis, looking at past data, seeing what actually drives overheads. And there are several common ways to do this calculation.
Okay, let's hear them. What are the usual ways?
One common one is the materials cost basis. The formula is basically budgeted overhead, budgeted direct materials cost times 100 gives you a percentage.
So overhead is applied as a percent of the material cost.
Exactly. A job using expensive materials picks up more overhead.
Okay, what else?
Another is the units of production basis. That's budgeted overhead, budgeted units to be produced, gives you a rate per unit.
Seems simple. Maybe if the units are all pretty similar.
Yeah, it works well then. Then you've got the machine hours basis. Budgeted overhead, budgeted machine hours. That gives you a rate per machine hour.
Makes sense if machines are the big cost driver, like electricity or repairs.
Definitely. If you've got a machine-intensive factory, this is a popular one. We also have the direct labor hours basis. Budgeted overhead, budgeted direct labor hours, gives a rate per labor hour.
Good if labor activity is what really drives overheads.
Correct. And the last main one is the direct labor cost basis. Budgeted overhead, budgeted direct labor cost, times 100 again, for a percentage.
So overhead is applied based on the labor wages paid for the job.
Right. A job with higher labor costs absorbs more overhead.
Okay, 5 different ways to calculate these rates.
Mm-hmm.
So once we have a rate, what's the final step in getting the job cost?
Step 6, calculating the total cost and often the selling price. The total cost is simply direct materials plus direct labor plus the overheads applied using one of those rates we just talked about.
Add the 3 bits together.
Yep. And once you have that total cost, the selling price is often just the cost plus a markup, usually a percentage for profit.
You mentioned a desk example earlier. Can we quickly revisit that?
Sure. If the total cost to make that custom desk was, say, R250, and the company wanted a 30% profit margin,
Okay.
the markup is 30% of R250, which is R75. So the selling price would be R250 plus R75, which is R325.
Cost plus markup equals price. Got it. Now, your notes had example 7.1, Tybo Limited. Can we walk through that?
Absolutely. So for Job 1 in August, Tybo used R40,000 of direct materials.
Okay.
And they had R30,000 in direct labor costs. Their policy is to apply overhead at 50% of direct labor costs.
So 50% of the R30,000 labor cost.
Exactly, which is R15,000 for overhead on this job.
All right.
So you add it all up. R40,000 materials plus R30,000 labor plus R15,000 overhead gives a total cost for Job 1 of R85,000.
R85,000 makes perfect sense. Now, there's also question 7.1 about Man 1 Company, calculating those different rates we discussed.
Yes, so that's a good practice one. It gives budgeted figures for Man 1's assembly department. R936,840 total overhead, 450,000 units. R738,540 material cost. R845,920 labor cost. 220,000 labor hours, and 84,500 machine hours.
And we need to calculate the rate for all 5 bases.
That's the task, yeah. Round it to 2 decimal places.
Okay, let's do a quick run through. Units basis.
Yeah.
R936,840, 450,000 units. That's about R2.08 per unit.
Correct. Material cost basis. R936,840, 84,500 hours. R11.09 per machine hour.
Spot on. Labor hours basis.
Yeah.
R936,840, 220,000 hours. That works out to about R4.26 per direct labor hour.
And finally, labor cost basis. R936,840, R845,920 times 100. Around 110.75% of direct labor cost. Excellent. So Man 1 has these 5 options, and their choice really depends on what they believe is the main driver of their overheads.
Right. Which factor has the strongest link? Okay, now let's switch gears a bit. What about work in process?
Ah, yes. WIP. Basically, these are the jobs you've started but haven't quite finished by the end of the accounting period.
Still on the production line, essentially.
Pretty much. Because job costing tracks costs job by job from start to finish, any costs you've already sunk into an unfinished job at period end need to be accounted for. They just sit there as work in process inventory until the job is finished.
So you carry those costs forward.
Exactly. You add them to the costs incurred in the next period to get the final total cost when it's done. Example 7.2 revisits Tybo's Job 1.
Okay.
It turns out Job 1 was actually started back in July, and by the end of July, it already had R7500 in costs attached to it.
That was its opening WIP balance for August then.
Correct. Then in August, they incurred the R85,000 we calculated earlier.
Right.
So the total cost of the completed job at the end of August is the opening WIP, R7,500, plus the August costs, R85,000, which gives R92,500 total.
R92,500, got it. So WIP is inventory still being made? How's that different from finished goods?
Well, finished goods are finished,
well,
fully completed, ready for sale.
Makes sense.
WIP is still in the pipeline. Both WIP and finished goods, along with raw materials, make up a company's inventory on the balance sheet. It's a key asset.
Okay.
One small note, if you end up having under or over-applied overhead for the period, that difference usually isn't put into the finished goods cost. It often goes straight to the cost of sales account.
Ah, interesting. So the finished product cost reflects the applied overhead, not necessarily the actual.
Generally, yes, for inventory valuation purposes. Example 7.3, Liam Keith Company, is great for seeing WIP and finished goods in action together.
What's the setup there?
They give us opening WIP for 2 jobs, 641 and 642. Then they list the material, labor, and machine hours used during the quarter for 4 jobs, 641, 642, 643, 644. We also get the budgeted annual overhead and machine hours.
So we can calculate the overhead rate again.
Exactly. That's step 1. Budgeted overhead was R800,000. Budgeted machine hours were 50,000 for the year.
So the rate is R800,000, 50,000 hours?
Yeah.
That's R16 per machine hour.
Perfect. So for Liam K, overhead gets applied based on machine hours used at R16 an hour.
Okay.
Step 2 is calculating the applied overhead for each job and then the total cost. For Job 641, it used 20 machine hours. So 20 times R16 is R320 in applied overhead.
Right. And to get the total cost for 641.
Take its opening WIP, R2,850, add the materials used this quarter, R750, add the labor, R480, and add the overhead we just calculated, R320.
Okay, R2,850 plus R750 plus R480 plus R320 equals R4,400 total cost for Job 641.
Exactly. And the example tells us jobs 641, 642, and 643 were completed during the quarter. Job 644 was still WIP.
Ah, so the cost of finished goods for the quarter is the sum of the costs of those 3 completed jobs.
Precisely. That's step 3. So R4,400, Job 641, plus R2,750, Job 642, plus R9,860, Job 643, gives a total cost of finished goods of R17,010.
And the ending WIP value is just a cost accumulated on the unfinished one, Job 644.
Which was R5,000. Yep. That distinction is vital for accurate financial reporting.
Okay, that's clear. Now, what happens when you actually sell these finished goods?
Well, you usually want to make a profit, right? So you add a markup to the cost.
To get the selling price.
Correct. And since each job cost is unique, the markup strategy can vary. Example 7.4 continues with Lam Kai.
How do they price their jobs?
For Job 641, cost R4,400, they added a 50% markup. So selling price R6,600.
Okay.
For Job 642, cost R2,750 for 100 units, they sold 95 units at R35 each. So sales revenue of R3,325.
The price per unit for that one.
Yeah. And for Job 643, it cost R9,860. They added a 30% markup for a selling price of R12,818.
So we have the sales revenue for each. To get the profit, we need the cost of goods sold, right?
Exactly. For Job 642, they only sold 95 out of 100 units. So first, find the cost per unit. R2,750, 100 units equals R27.50 per unit.
Okay.
Then the cost of goods sold is 95 units times R27.50, which is R2,612.50.
Got it. And for the others, since they sold the whole job, the cost of goods sold is just the total job cost.
Correct. Then gross profit for each job is just sales revenue minus cost of goods sold. Adding them up, Liam K made a total gross profit of R5,870.50 for the quarter from those jobs.
Okay, we're really seeing the flow now. WIP to finished goods, then sales and cost of sales. There are a couple more questions here. Question 7.2. Good fit dental technologists.
Yes, they make custom dentures, use machine hours for overhead. Budgeted overhead are $79,800, budgeted hours $14,000. We get August costs, material, labor, machine hours, for jobs for 3 dentists. Actual August overhead was $35,325.
And we need to find the absorption rate, overhead absorbed per job, cost of goods sold, closing inventory, and the over-absorbed overhead. Quite a bit.
It ties a lot together. First, the rate, $79,800, 14,000 hours.
That's our 5.70 per machine hour.
Right. Now, apply that to each job's hours. Dr. Pillay, 2,200 hours are 5.70 are 12,560 overhead.
Dr. Green, 2,050 hours are 5.70 are 11,685 overhead.
And Dr. Inlovu, 800 hours are 5.70 are 4,560 overhead.
Okay, now total cost per job. Material plus labor plus absorbed overhead for pill A. R 9,200 plus R 30,550 plus R 12,585 equals R 52,290.
For green, R 18,550 plus R 29,800 plus R 4,585 plus R 19,285.
Good. Now the info says pill A's job was completed and invoiced. That means its cost, R 52,290, is the cost of goods sold for August.
Okay.
Green's and Lovu's jobs were completed but not invoiced, so they are finished goods inventory. Their costs are $60,035 and R 19,285 add up to R 79,320 in closing inventory.
Right. Finally, the under-over absorbed overhead. We compare actual overhead to absorbed overhead.
Actual was R 35,325. Total absorbed was R 12,540 plus R 20,785 plus R 4,585 equals R 28,785.
So actual R 35,325 is higher than absorbed R 28,785. That means underapplied or underabsorbed.
Okay, that makes sense. Question 7.3. Bolt manufacturing takes us back to calculating the rates again.
Yes, and applying them. It gives budgeted overhead, material cost, labor hours, machine hours. First, calculate 4 rates: material cost percent, labor hour rate, machine hour rate.
Then apply each to Job 78 using its specific material, labor hours, and machine hours data.
Exactly. Let's quickly get the rates. Material cost basis are 651,260 are 326,790 100, roughly 199.28%.
Labor cost basis are 651,260 are 476,150 hours, about 136.19%.
Labor hour basis are 651,260,950 hours, approximately are 6.45 per hour.
Got them. Now for Job 78, materials are 3,618, labor are 4,980, labor hours 1,580, machine hours 465. Sure. Play each rate.
Labor cost basis, 136.99% of R 3,618 plus R 4,980 plus R 7,280 plus R 15,880.
Labor cost basis, 136.19% of R 4,980 is roughly R 6,072 overhead. Total cost, R 3,618 plus R 4,980 plus R 6,772 equals R 19,073.
Wow, big jump. It can happen. Machine hour basis, 465 hours. Our 17.5 hour is roughly our 7,970 overhead. Total cost. Our 3,618 plus our 4,980 plus our 7,970 equals our 16,568.
It really shows how different the total cost can look depending on the overhead base chosen, doesn't it?
Absolutely. It highlights why choosing the right base, the one that actually drives costs, is so important.
Okay, let's talk about the tool used to track all this. Job cost sheets.
Right, individual records for each job.
Exactly. It's the central document holding all the financial info for one job. Tracks direct materials used, direct labor, applied overhead. Figure 7.1 shows a typical layout.
What's usually on it?
Customer info, job number, description, key dates, ordered, started, needed by, finished.
Yeah.
Then the main part breaks down costs, often by department.
Feels like.
Date, description, quantity or hours, rate, amount for materials, labor, overhead, and usually a summary at the bottom. Total cost, maybe selling price, gross profit.
A complete financial diary for the job. Question 7.4, Kiki Limited actually asks us to fill one out. Yes. They give budgeted overhead and labor hours for 2 departments, assembly and polishing, then the specific costs for Job TT321. We need to calculate the overhead rates per department, then complete the job cost card for TT321, find its total cost, and the selling price for a 20% gross profit.
Okay, rates first. Assembly. R 54,000 overhead, 13,500 labor hours. R4 per direct labor hour.
Good. Polishing. R 82,500 overhead, 15,000 labor hours. R 5.50 per direct labor hour.
Got the rates. Now for Job TT321 costs. Material. 45 kilogram, R 24 kilograms, R 1,080.
Assembly labor, 27 hours, R fix 131.2 hour equals R 5.50 hour, R 264.
Perfect. Now total cost for Job TT321.
Add them all up. R 1,080 plus R 141.75 plus R 108 plus R 331.20 plus R 264 equals R 1,924.95.
Right, and the selling price for a 20% gross profit. That means the selling price should be 120% of cost, right? Yeah. Cost is 100%, profit is 20%.
Oh, okay, so R 1,924.95, 1.2 new. Gives about R 2,309.94.
Exactly, and the job cost sheet would neatly lay all that out. Okay. One more important thing, spoilage. Right, stuff that gets damaged or wasted during production. Not everything comes out perfect.
Unfortunately, no. We usually split spoilage into 2 types, normal and abnormal.
Okay.
Normal spoilage is the kind you sort of expect. It's considered a regular part of the process for that product. Its cost usually gets rolled into the cost of the good units produced.
So it makes the good units slightly more expensive.
Essentially, yes. Abnormal spoilage is unexpected, not part of the normal routine. Maybe a machine broke down badly or something unusual happened. Its cost is typically written off as a loss for the period.
So normal spoilage cost stays at the product. Abnormal spoilage becomes a separate expense line.
That's the general idea. Example 7.5 shows this. Job ABX cost R 28,000 aimed for 5,000 units. Normal spoilage is 2.5% of units started, so 125 units.
Okay.
But they actually had 175 spoiled units. So 175 total minus 125 normal means 50 units of abnormal spoilage. The initial cost per unit was R 5.60, R 28,000, 5,000. The example shows how that total R 28,000 cost gets split. Some stays with the good units, some is allocated to normal spoilage, often handled via the overhead rate, and the cost of the 50 abnormal units is treated separately.
So reducing spoilage, especially abnormal spoilage, is key to keeping costs down.
Definitely a competitive advantage. Okay, finally, let's quickly touch on the ledger accounts used in job costing, the T accounts.
Ah, the backbone of the accounting system. Which ones are specific to job costing?
There are a few key ones. Material control tracks raw materials purchases in materials issued out to jobs.
Yep.
Work in process control, sometimes called production control, this is the big one. It summarizes all costs added to production. Direct materials, direct labor, applied overhead. And it shows costs transferred out when jobs are finished.
Right, the hub for job costs.
Then finished goods control tracks completed goods coming in from WIP and the cost of goods going out when sold.
Makes sense.
Labor control tracks labor costs. Factory overheads control accumulates actual overhead costs incurred and compares them to the applied overhead to find that under or over application we talked about.
Where you see the difference between budget and reality.
Exactly.
Yeah.
And finally, cost of sales or cost of goods sold records the cost of the jobs that were actually sold. Any significant under-over applied overhead often gets closed out to here at the end of the period.
So these accounts provide the full financial trail, from buying materials to selling the finished job. Example 7.6, Sizama Toolmaking, shows these in action.
Yes, it shows WIP accounts for different projects, how costs flow in, materials, labor, applied overhead based on labor hours, how actual overhead hits the overhead control account, and how completed sold projects move through finished goods to cost of goods sold. It even calculates gross profit on the sold projects.
And there are several more detailed questions here, too. 7.5 asks us to fill in missing ledger figures, and 7.6 through 7.9 give various scenarios applying all these concepts, calculating rates, total costs, profits.
They're really good practice. Working through those is honestly the best way to cement your understanding of how the whole system fits together.
Well, that really has been a deep dive into job costing. We've covered a lot, haven't we? From allocating overheads and calculating absorption rates.
Through handling WIP and finished goods.
The importance of those job cost sheets, dealing with spoilage.
And finally, those key ledger accounts.
Yeah, it feels like we've got a much clearer picture now.
Hopefully. Understanding job costing really does give you valuable insight into how costs are managed, especially for unique products or services. It's not just adding numbers. It's about having a system to accurately track resource use for every single job.
Absolutely. So, as a final thought for you, our listener, maybe consider how these job costing principles might apply even outside manufacturing. Think about service industries, project management, anywhere specific pieces of work need detailed cost tracking.
That's a great point. The underlying logic has broad applications.
It definitely encourages you to keep exploring cost accounting and how it shapes business decisions. Thanks for joining us on this deep dive.